Hello and welcome. Welcome back to some of you. In this video, I'm going to show you how to build your own trading strategy. I'm going to show you how to go from a simple idea, and then I'm going to take you through the 5 simple steps that I've used to build and create a trading strategy into something that's really pretty usable. This follows on from a video that I've done previously. In fact, it was a 3-part video series where I took you through the stages of how to create a day trading algorithm, and it's actually one of my most popular videos on the channel, so I thought let's do some more of that. If you haven't seen that already, then I'll leave a link to that probably up in the screen or down below, so you can go and watch that. It's a slightly more in-depth video than what this one is going to be. This one I'm going to try and keep to one video and keep it short and sweet. The strategy I'm going to show you the development process for is a strategy for trading pound versus the yen Forex pair, and it's a simple trend following strategy, and I'm going to show you the equity curve of that strategy. I'll put that on the screen now so you can have a look at that. The strategies that I like to show you how to develop, and the ones that I put on this channel, are ones that are basic enough that you can trade manually. See, I use software, I use multi-charts, which takes trades automatically according to how I program it. But the ones that I like to show you are ones that you can take away and you can trade manually, even if you don't use automated software like I do. If you want the written rules for this strategy, obviously you can watch as I go step by step, but if you want the written out rules, then I'll leave them in a link in the description below. I'll write out a PDF and you can get that report, including all the rules and the strategy performance reports. As I've already mentioned, the strategies that I typically develop normally have a few too many moving parts, if you like, to trade manually. So they're ideal for using software to automate your trades, but they're a bit too difficult to trade manually. That's why I tend to select some of the few ones that are a bit more simple. And the one I'm going to show you is one that I developed actually a few years ago, and it's a great one to show you because you can see that it's carried on working after development, which is of course our goal when developing a strategy. It was more than 2.5 years ago that I first developed the strategy, and pleased to say it is still making profits now. So what we do now is we go over to the computer and I'll walk you through the 5 simple steps that I used to develop this strategy. Now we're at the computer, I'm going to show you about 7 or 8 different charts, and I'll walk you through the 5 simple steps that we use for development. Now, I'm using data for this. I mentioned that I developed this in February of 2017. So what I'm doing is I'm using data from 2008 right the way through to the end of 2015. So that gives me 8 years of data to look at how pound yen moved and develop a strategy on that. And then that will leave me from the end of 2015, so 2016 and 2 months of 2017 as out of sample data. So then I can test the strategy that I've created to see how that worked moving forward on the out of sample data. And then right at the end, of course, because now is October 2020, I can show you how the strategy continued to work from the development date of February 2017. Okay. So we're looking at the first chart, and it's a 15-minute chart, pound yen. The reason I use a 15-minute chart is just to get the definition. The rules don't actually correspond to a particular time frame. So this could have been a 5-minute chart, 10-minute chart, 30-minute chart. Doesn't really matter. It does have to be an intraday chart though. What the strategy is, it's very basic, and we're looking at going long or buying if the price breaks above the high of the current day or the current session, and we're going to go short if the price breaks below the low of the current session or day. However, you realise that probably wouldn't work very well unless we have an extra rule, and the extra rule is I'm going to create a time window for this to happen. So we're going to use a time window. I don't know how long it's going to be. It could be an hour long, it could be 4 hours long. This is what we're going to test. But what that means is, let's say we've got an hour's time window between 9 AM and 10 AM. So we can't go long unless the high or the low of the day is broken within that time window. So before that, the market has had time to establish the day's high or the day's low, and then if that high or low is broken within the time window that we're going to use, then we take the trades. Okay. So the first chart we're looking at is the strategy applied without using a time window. So it is literally, it's running from midnight round to midnight the next day. And if I pull up the equity chart, you can see that it's not terrible. It's not great. I've seen far worse, but considering that we haven't done any development on this yet, it's pretty good. It's a pretty good start, and that often does give me confidence straight away that without doing any sort of modification or any development, the equity curve looks in the right direction to begin with, then we're on the right track. So the next chart we'll look at is the same chart, but what we've done is an optimization to look at what the best starting time is. The end time is midnight, and we're going to run an optimization to see where do we start trading. And you can see on the right hand side here, we go from 0, 1, 2, these 200, this is just 200 o'clock or 2 o'clock in the morning, right the way through to 2300. And you can see that the total number of trades gets less, obviously, as we start to trade later, because it allows less time for the trade to happen. And looking at the net profit, we can see that the best net profit is at 4 a.m. in the morning, and it's not quite the best average trade. Going a little later gives us a better average trade, but there's not a lot in it. So for now, I'm actually going to use 4 a.m. So that's literally our first step or our first development. And I've already applied this to the chart, and this is the equity curve. Now we can see straight away it's a slightly smoother, slightly better equity curve, just applying that 4 a.m. start time. So between midnight and 4 a.m. we don't trade. Any time after that we can take the trades if they appear. Moving on quickly, next chart, we're going to look at doing an optimization on the end time. You can see this right hand column here, end time. So if we end trading, we start at 400, so we're going to end at 5, 6 through to 2400. And the opposite, you can see that as we increase our trading window, the number of trades increases too. Now, looking through these, best results are around 1600. Best average trade is around 1500. Slightly worse net profit, but we're going to use 1500. Let's see how that's changed the equity curve. Now look, it's even smoother, so the equity curve's getting even better now, so we're really heading in the right direction. And in fact, that straight away is a tradable equity curve as far as I'm concerned. That's really pretty good. Let's move on to the next chart. Now, this is where we're going to look at the stop loss. So we've got a stop loss here, and going from 0 right the way through to 4. Now that's actually 400 pips, because we're dealing with pound yen. It's just the way that multi-charts does its calculation. But 4 is equivalent to 400 pips. And I like to keep the stop kind of as small as I can, but without sacrificing too much profit. So running down these results, straight away I'll see net profit of 23 million there. Now that's yen, by the way, and average trade of 13,000. That's actually the highest ones at 1.4, 1.5, 1.6, anywhere there. I'll use 1.5 just to keep it round. So 1.5 is equivalent to just 150 pips. So how does that look? Let's go to the next window and I'll show you how that looks with the 1.5 stop. Barely any different. That's great, because that's allowed us to put a stop loss in the market, bit of risk management, and it hasn't drastically affected our equity curve or our returns. So the last thing I'm going to look at is looking at setting a profit target. I don't often use profit targets, and it's a simple one, just using a set pips profit like the stop loss, but pips. So we got a profit here, and I've gone from 0 pips all the way through to 600. And very quickly, just running down these average trade numbers, you can see that they get bigger and bigger as we go down. Bigger, bigger, bigger to a certain point. And where I actually stopped around here, you can see 25 million. After that, results don't get any better. So, like I say, I don't often use profit targets, and this being at 470 pips will rarely be hit, but it does improve it slightly. So we're going to use 470. And let's look at the equity curve again. It's probably hardly any different, and no, it's not any different. Look at the total trade analysis. We've got an average trade of 13,885, which is reasonable. That's about 13 pips per trade. So once we've taken out a bit of commissions and trading costs, we're still going to be making money with this strategy. So that's good. And that's about it for the development. Dead simple, just a few steps. What I'm going to show you now, I mentioned it was February 2017 when I first developed this, and I was using data only up to the end of 2015. So now what I can do is have a look to see how the strategy performed going on from 2016 right the way through to February 2017. So let's look at the next chart, and we can see, looking at the date on this, this is end of February 2017. So how did our so still looking at 13,000 of an average trade. That's good, hasn't dropped off. And look at the equity curve, it's continued on up. If I highlight December 2015, and anything to the right of that is moving forward and moving in the right direction. And the last chart I want to show you is a chart right up until the day I'm filming this, which is 23rd of October 2020. So almost another 3.5 years after I first developed this strategy. So let's see how it's continued to perform for me. And look at the equity curve. Now, can't really ask too much more than that. That's continued in the right direction. The behaviour of the market obviously hasn't changed, and the development steps I went through obviously weren't over-optimised, and things have just carried on working, which is great. So I hope I didn't move too fast. I was conscious about keeping the video quite brief. Hope you've been able to follow along. It was really quite simple, isn't it? Creating a strategy from scratch isn't that difficult once you know the proper steps. And don't forget, like I said, if you want the written out rules for this strategy, I'll leave them in the description down below that you can download them. If you have any comments or questions about this video or this process, then leave them down below as well. You can email me, jared@thetransparenttrader.com. And if you think the video is good, useful, helpful, then please like the video and maybe subscribe to the channel for more videos just the same. Until the next one, this is Jared Goodwin, and thank you.